Good morning, good afternoon, and good day. Welcome to today's webinar on the impending impacts of ASC 606 on subscription businesses. My name is Vijay Ramakrishnan, and I'm from Intact, the leading provider of best-in-class cloud ERP software. And our focus at Intact as a company is on helping finance teams in high-growth companies sustain that growth. And we've been helping subscription software companies do that by automating the billing, accounting, and reporting around the complete contract lifecycle. The focus of today's webinar is on the accounting aspect. We are on the cusp of the most sweeping accounting change in a decade in the form of ASC 606. And I'm pleased to say that today we have one of the foremost experts on revenue recognition, Tony Sandhi, ready to do a deep dive for you on the impacts of ASC 606 on subscription businesses. I'll be introducing Tony shortly and handing the floor over to him. But before I do that, I wanted to give you a quick overview of what we'll be covering today. Before handing the webinar to Tony, I'd like to cover a few quick housekeeping items with you. Tony is going to spend the bulk of our time today on an in-depth look at the accounting issues around ASC 606 and how they affect subscription companies. Towards the end of the webinar, I'll cover what we at Intact are doing to help subscription companies prepare for the transition by providing an automated solution that manages the entire contract lifecycle. And then we'll conclude today's webinar by taking some of your questions as time permits. So let's cover off those housekeeping details really quickly. The first is we welcome your questions. We want to make this webinar as useful to you as possible. So if you have a question for Tony or for Intact, feel free to type your question into the chat box or the Q&A box, and we will try to get to your questions during the course of the webinar. If we don't get to your question live here today, we will be following up with you individually afterwards. You'll also be receiving over email after the webinar a copy of this presentation and a recording of the webinar in follow-up emails, so you'll have that for your reference. The second bit of housekeeping that I wanted to cover with you is for those of you that are going to be requesting CPE credit today. In order to receive that credit, you do need to attend the event in its entirety. There will be some polling questions during the course of the webinar, and at the end of the webinar, you'll be asked to complete a survey. That's also where you'll be able to provide your license number and contact details. So please complete that so that we can process the CPE credit for you. So now that we have the housekeeping out of the way, I would like to get to the heart of what we're going to cover today. And in order to do that, I'd like to introduce our featured speaker today, who is Tony Sandhi. Tony is the founder and president of AC Sandhi and Associates, which is a financial consulting, investment advisory, and executive training firm. Tony is currently a member of the Emerging Issues Task Force of FASB, the Financial Accounting Standards Board. He's also a member of the Investor Advisory Group of the Public Company Accounting Oversight Board and the chairman of the Corporate Disclosure Policy Council of the CFA Institute. And he's got a number of consulting activities around revenue recognition practices in the software and contracting industries, revenue arrangements with multiple deliverables, and a number of other accounting and financial reporting issues. So you'll be hearing today from one of the foremost experts. And with that, it gives me great pleasure to hand the webinar and the floor over to Tony. Tony, it's all yours.
Thank you, Vijay. Appreciate that a lot. Very glad to be here, and As you said, since we're interested in talking about these issues and taking a deep dive into it, let's get started. One of the first things that I want to do is actually begin with this polling question that you see up on your screen. And what I'd like to do is to get a sense of where your firm is in the implementation process. We're just trying to get a sense of it. I'll show you a little bit later sort of the data that I've collected because I've conducted this poll since July of 2014 in monthly webcasts that I conduct. Many of them, if not just about all of them, have been on this new accounting standard. And what I'd like to find out is, as I said, where you are in the firm with respect to the implementation and getting ready for 606. Maybe you haven't started the assessment yet, or the team has been appointed either formally or informally, and the initial read and preliminary assessment of the standard has been completed, or you're fairly close to it. A formal assessment is your next choice, and it starts to look at, in other words, what are the different disciplines that are going to have to be involved, what their work is going to be. And then the next stage, of course, is much further along, where you've made your decision with respect to the method you're going to use for transition, and you've also made various other major decisions that are involved. The next stage is where your sales, your marketing, your operations, legal team, your internal audit, all have been involved, and the approvals are either complete or nearly complete. Or maybe you're not involved in the process and don't know where things are yet. So we give you that choice as well. We'd like to see where you are.
Yes, let you know that the polling results have come in, and the top choice here was in today's poll that 42% of the folks had completed an initial read and preliminary assessment.
Okay, very good. I see the responses. Shall we take a quick look at what we've seen? As you can see, over time, what has happened, and the most recent one I have reported here is May, although we did do one in June, but 26 or 27% for the assessment, 58% for the initial read. And, you know, this is a function of the different types of companies that are represented in the different webcasts. You get slightly different numbers if you're talking to companies that are not yet public, and as you'll see, they have a little bit more time. But very good. I appreciate that information. It's very helpful. So let's take a look at what we have on our plate today. And what I'd like to do is to begin with just a very brief introduction and also talk about the revenue reporting roadmap that the FASB has added or included, I should say, in the accounting standard itself. We'll also discuss effective dates in transition. Then I'm going to take a look at sort of a more specific focus from the perspective of software and SaaS companies, or primarily subscription businesses. One is an issue that relates to the identification of distinct performance obligations in the contract. Next, I want to make a few comments on fixed or determinable consideration. I'll talk briefly about what we do and how we look at it today and how it's going to change. And then the next is probably the most important issue from your perspective, and that is the different kinds of licensing issues that will come up. The royalties that some of the subscription businesses charge, because a few subscription businesses, as you know, their business model is to charge their customers in terms of the sales that they can generate using the IP license of the seller, or it's sometimes usage-based. So we'll take a look at that. And then the next one is equally important to the extent that the subscription business actually requires a substantive setup or implementation. Then I want to make a few brief comments on disclosures because of the change in 606 relative to what you're doing today. So that's just sort of a roundup of the different topics. Let's take a look at our next issue. Then I wanted to begin, as I said, with the core principle. Now, as you, I'm sure, are aware that any time we look at anything in financial reporting, we're concerned with three aspects of that. And that is, when should we recognize that particular item? Since we're talking about revenue, let's couch it in those terms. So the timing of revenue recognition is one issue. That's your recognition aspect. The measurement or the amount that you should recognize, that's the second. And then the third component that we always look at with respect to any item, and certainly do in terms of revenue, is what do we know about the certainty or the risks related to being able to capture, earn that revenue after having provided the services that we promised the customer. And certainly this accounting standard does take a look at revenue from that perspective. So look at the core principle that I've identified here from the FASB standard, and that is an entity should recognize revenue, so this is your first component, to reflect the transfer of promised goods or services to the customer. And notice that in parentheses I've added it's really a transfer of control, because that's what determines the timing, when you've achieved or reached and met guidelines required for a transfer of control. Now, if recognition is the first component, please, as I said earlier, note that the amount of revenue would be the second concern. And that this standard says you should recognize in the amount that you expect to be entitled to in exchange for goods and services. Now, please keep in mind the amount that you expect to be entitled to is fairly similar to, but in some cases will diverge from the way we look at things today. And the main point I want to make with respect to this core principle is, and particularly with respect to measurement, is my next bullet point or my first point in here, and that's collectability. It's collectability and the assessment of collectability that's very different in 606 than it was in 605, or I should say is 605. So although collectability remains a recognition threshold in 606, it's not a measurement or a presentation issue in 606. Okay. Now, notice that you'll recall that I had said earlier we're always interested in three aspects: recognition, measurement, and disclosure. And I was initially disappointed to see that the core principle in 606 ignores disclosure. However, even though it's not mentioned here, I have to say that the standard does break new ground with respect to both the quality and the quantity of disclosure requirements, and particularly for software and subscription businesses, because prior to this, and today if you wish, neither 985, 605, nor 605 in general really has a comprehensive set of disclosure requirements as that would relate to software and subscription businesses. So that's going to be a big change for you. All right, let's take a look then at our next slide, and that will tell us how the board thinks we should achieve this or meet the guidance that they've provided, and that's through this roadmap. Now please note that the FASB provides us with 5 steps. Those of you who have either attended a webcast of mine before or been in one of my seminars, alternatively also if you've read my book on revenue recognition, you know that I've always had a 6-step roadmap, and my first step is actually that you need to review the contract. It's not possible to do anything without understanding the contract. So please keep that in mind. I'll say that the FASB must have assumed that everybody's going to read the contract. I find that that is not, unfortunately, the case, but it's an important thing. All right, so that's our roadmap. Let's take a look at our next issue. Now, I wanted to start with the effective dates and the transition issues. For public entities, of course, the FASB last year did allow additional time, and as a consequence, the actual effective date now is for periods that begin after December 15, 2017. So for calendar year companies, for example, it would be the period beginning January 1, 2018. That is when you would adopt. You are permitted to adopt 1 year early if you're a public entity, and that's, of course, in terms of the fact that you're allowed to adopt it as of January 1, 2017, because that was the original effective date in 606. It depends. It's not clear that there are a lot of companies. I've heard, for example, and seen some analysis. I saw an analysis the other day of SAB 74 disclosures and so on, but the number of companies that say they're going to early adopt remains fairly small. So it's unclear that there's going to be a lot of that available. By the way, we might see more foreign companies adopting early, and part of the reason there is it's actually twofold. One, IFRS and the IASB had always said that they would permit early adoption. The rationale underlying that is very simple. At the moment, the IASB does not really have a comprehensive set of accounting standards as they relate to revenue. They do have two standards, one sort of a general standard on revenue recognition, and the other relating to contracts. But that isn't sufficient because, for example, they don't have much in terms of multiple element arrangements, they don't have much on linkage, and so on. So from that perspective, early adoption applying IFRS 15, which is largely similar to ASC 606, would work. But please keep in mind, it really is different. There are going to be differences, and it's not really something that one would say, or at least I don't think, that the two standards are really converged. They had started off somewhat close, but they're not anymore. There are many differences. Okay. Now, please keep in mind these public entity dates also apply to not-for-profits who have either issued or are bond obligors. So any kind of debt securities or other securities that are traded, listed, or quoted on an exchange or an OTC market, those would also be affected by the same requirement. And then our next slide will tell us about the effective dates for non-public entities. So let's look at that. For all other entities, you will be beginning effectively after, say, January 1, 2019. So the smaller subscription businesses are unlikely to be, which are not public, I should say, simply at the moment, that are not public would have that additional period to adopt. There are certain differences with respect to when they have to adopt the interim information and so on. There are certain other differences as well. Now, with respect to the adoption dates, having talked about that, let me mention a couple of other points that are not on your slide. One, most importantly, has to do with the transition methods. The FASB permits two transition methods. They do state a preference for a full retrospective, which in essence, or generally speaking, would require that you go back and restate all prior periods that you're presenting for comparison purposes and so on. So a calendar year-end company that adopts as of January 1, 2018 will reflect both the 2016 and the 2017 results and balance sheets and so on using 606 as well. So that's, in a sense, what we're talking about with the full retrospective. Now, recently, the FASB has issued certain practical expedients. So it reduces the burden with respect to modifications that have occurred over the last 2 years, that is the 2 years prior to the adoption date. It relaxes certain requirements with respect to completed contracts. It changed the definition of a completed contract, and so on. So that's the full retrospective. Please keep in mind the FASB and the IASB both felt the full retrospective would be better because the user community normally prefers that. The user community prefers the full retrospective simply because they get comparative information. It is not clear to me, given the practical expedience and the fact that the practical expedients are optional, that we are actually going to get a lot of comparability over time or across companies in the same industry. And I think you can sort of forget about comparability with the IASB because of all these different choices. The other thing I'd like to point out, the alternative, of course, to this transition method is the modified retrospective, where you actually are not going to show the effect on the prior periods in any great detail. You'll actually take the lump sum effect of all the change in the 2016 and the 2017 periods, put that into the beginning retained earnings. That's your cumulative catch-up in a sense, but it's sort of that's the modified retrospective. And those are your choices. Keep in mind, it's strictly speaking, even though it sounds like two alternatives, either the full retrospective or the modified retrospective, as I pointed out, once you add in all the different practical expedients and the fact that companies have a choice, it's optional whether they elect one or more or any, in fact, of those practical expedients. So that is also going to create a difference. And I think that there's also some room for judgment in some other aspects of these. But that's sort of what I wanted to tell you about the transition method. And what I'd like to do, I believe, if I recall correctly, we have our question here. And I'd simply like to find out where you think your company is going to end up. Will you use the full retrospective? Will you use the modified or the partial retrospective? Or maybe no decision has been made. And once again, I'm actually going to show you the results for this question as well, because I've been tracking it all the way since July 2014. Please keep in mind, it's a fairly complex decision, and I understand companies are still struggling with it. There are times when I've talked to companies that I'm working with where they made up their minds beforehand and then they started to waver. So it's something that you have to keep in mind. It is not a straightforward decision, simple decision. It is very complex, and that's why it's going to be important to understand what the issues are. So let's see I'm looking forward to seeing what you are going to say about this.
So Tony, it looks like the polling is complete, and a great majority of the folks, 69%, are still evaluating this and haven't made a decision.
Very good. And actually, it's interesting. If we show them the results that I've been tracking, look how close we are, 69, 70% from the May results. And as you can also see, there's been some change. What I've always found really striking is the increase in the full retrospective. And the last thing I want to point out about this issue is that you really should consider the full retrospective, because in addition to providing external users with comparative information, you need it internally. So internally, when you use the modified, you're going to lose a lot of information. So from that perspective, there's that sort of additional incentive to use the full retrospective. But thank you. That was very informative. And let's move on to the next issue. And this is where I want to discuss the identification of distinct performance obligations. As you know, for subscription businesses, the most critical element these days under current GAAP is the issue in 985-605, which actually was, it's an EITF consensus that became part of the standards, of course. And the issue was whether your customer has a right to take possession of your software at any time during the contract term without significant penalty. And this particular accounting standard, when it talks about significant penalty, it looks at it across two dimensions. One is whether you have a monetary penalty. In other words, is it going to cost you? a lot of money in coding and so on in order to be able to use the software internally. That is from your customer's perspective, that is. And then the second way it looks at it is whether there is a distinction or a difference in the utility of the software relative to, the two possibilities you have. One is let the seller or the vendor host it and allow you to use it and therefore you're subscribing to it, or do you take possession and use it internally? Now, if your answer was yes, then the arrangement deliverables were subject to 985-605, and you would have effectively a software license that you were offering your customer and a hosting service. Now, please keep in mind, of course, you could have other deliverables as well, but I'm just keeping it simple, saying it's simply the license and the hosting service. On the other hand, if your customer could not take possession of the software or is allowed to take possession, but it's costly either on one or both of those dimensions that I talked about earlier, then the answer would be no, it's a subscription contract, and it would not be subject to 985-605, and it results, in essence, in ratable revenue recognition. Now, so that's what we do today. Let's take a look at what 606 is going to ask of us. And for that, you see Jay, can you go back one slide, please? I'm sorry, I need to add a little bit more. And fundamentally, the question from our perspective, in the case of this issue of identifying the performance obligations, there are conditions under which the customer may be able to take possession of the software. In other words, you're actually selling them the IP license. However, it's possible that the relationship with the other deliverables or performance obligations is such that you cannot separate the license and the other services. So, for example, if the only way the customer can use the software is through that hosting service, right, so then they're highly interrelated, and one of the requirements of 606 is when that happens, you're not able to separate them, and you're going to end up with a single performance obligation. So my point here is that where, it was fairly clear based on the contractual terms and conditions and the facts and circumstances, much of the time it was fairly clear whether you had a subscription or you were selling software. It's not necessarily going to be the case. So you will have to be careful about the way your contracts are written. So this is sort of one of the most critical things I want you to keep in mind with respect to 606. The contract language and your practices matter. So from that perspective, it's possible what was a somewhat easier decision as to whether you have one or more deliverables may not work out that way under 606. So that's one of the things I wanted to point out. Now we can take a look at the next slide. And here I wanted to talk about the fixed or determinable consideration. Please keep in mind, or maybe I should say recall, I'm sure you recall, that under current guidance, in order to recognize revenue, we need to satisfy 4 criteria. And those 4 criteria are: we need persuasive evidence of an arrangement, delivery must have occurred, or performance must have occurred, the price has to be fixed or determinable, and 4th, collectibility has to be reasonably assured. The first 2, the contract, the persuasive evidence, and performance, those answer the timing question as to when to recognize revenue. The last 2, the price being fixed or determinable and collectibility being assured, allowed us to measure the amount of revenue. And fundamentally in 605, obviously you had to meet that criterion in order to recognize revenue. Now, in a sense, that fixed or determinable criterion goes away under 606. And what happens is the concept of variable consideration replaces it. However, in addition to the variable consideration, the new standard adds a constraint on the cumulative amount of revenue that can be recognized as of a given point in time. What that tells you is that the estimation process is going to change. You are going to need different types of information. You will need develop estimates, and these estimates are very different. One of the things that I want you to be very careful about with respect to estimates is that auditors, your auditors, are going to have to be on the lookout or vigilant about this as well. You see, the problem is that over the last several years, and particularly as a result of 606, there's been an enormous change in the type of estimations that we're doing. However, auditing of estimates was last looked at by any standard setter more than 32 years ago. So it's possible that the audits, those are going to have to be, they'll have to play catch up to this new estimation. So please keep that in mind with respect to the variable consideration and particularly with respect to the constraint. And my next point with respect to fixed or determinable is the issue of sell-in versus sell-through. So there, of course, if your contract was written in such a way that your distributor or reseller only had to pay you after they had sold the item, the license, for example, to an end user, then that would have held up revenue recognition. Here, it may not hold up revenue recognition 606 because it's considered as variable consideration or treated as variable consideration. And if you can meet certain criteria and develop reasonable estimates, you will be able to recognize it. Subject to the constraint, of course, but there's no question that for transactions through distributors and resellers, there will be an acceleration of both the amount and the timing of revenue recognition under 606 relative to 605. Now, the other thing is that fixed or determinable consideration also add another aspect to it. And that's what today we look at as extended payment terms. So there are either 5 or 6, I forget, technical practice aids or implementation guidance with respect to financing. And under certain circumstances, you had to think of a presumption and so on with respect to that. And one possibility was that if extended payment terms existed in the contract, then there was a question of whether the payment was either fees were fixed or determinable. Well, that goes away as well. It is replaced by a concept of a significant financing component. The critical point, though, that I would like to make here, that I wanted to make here, is not only is this different from fixed or determinable, but even more importantly, this comes into play, the financing, regardless of whether it is the customer who has more time to pay, which is where the guidance is today. That's all it talks about. 606 also provides guidance for when the seller receives payment in advance. So for subscription businesses that have business models of 3-4-year terms, for example, there the payment terms are going to matter, because you'll have to ask yourself what happens with the financing and so on. And then finally, there's this concept of sales-based and usage-based royalties. And what the board does is it says in essence that sales and usage-based royalties would be recognized at the later of either when performance occurs or when the actual sales or usage occurs. Well, if you're giving if you're selling your customer or having the customer subscribe to the use of your software, you're obviously going to make that software available at the onset of the arrangement. Now, the thing is that the sales and usage, therefore, must occur by definition after the customer has access to the software. So in other words, sales and usage-based, generally speaking, those royalties will be recognized later rather than sooner. And you can't, in many cases, consider that as variable consideration. But I will point out the one exception that the FASB has recently provided in the Accounting Standards Update. So that will bring us to our next. Now, what you need to do in 606 then is you must determine whether the license in a contract is a distinct performance obligation. Now, distinct licenses, therefore, may be performance obligations that are satisfied at a single point in time or over time. And that's where the concepts of functional and symbolic intellectual property will come into play. And then there's this concept of sales and usage-based royalties that I was talking about just a moment ago. And as I said, sales and usage-based royalties will be recognized at the later of when the performance obligation is satisfied or when the sales or the actual usage occurs. All right, so let's move to our next slide then. Now, a license is deemed to establish a customer's right to the intellectual property of the seller or the vendor. And licenses of intellectual property then may include, but they're not limited to, licenses of the following. Now, I'm going to begin with the last three here: the motion pictures, music, other forms of media, franchises, patents, trademarks. Those are not your concern. So fundamentally, the question is, are you licensing software? That's what you would be concerned about. Now that, the FASB in 606 draws a very, very important distinction. And it says this applies to software other than software that is subject to a hosting arrangement. That does not meet the criteria in 985.20. Now please keep in mind, 985.20 is the current guidance that refers to the costs of software that you intend to sell, lease, or otherwise market. So that's your subtopic 985.20. Okay? And in effect, therefore, let's take a look at 985.20-15-5, and that's on our next slide. And that paragraph tells us that software subject to a hosting arrangement is within the scope of subtopic 985.20. In other words, it's deemed software only when these two criteria are satisfied. Please keep in mind, both have to be satisfied. So the customer must have the contractual right to take possession of software at any time during the hosting period without significant penalty. So you'll recall I had talked about this just a few minutes ago, and remember that the significant penalty is must be evaluated along two dimensions. One was whether there's a monetary penalty, and second, whether there's a use penalty. And the second criterion, by the way, is that it is feasible for the customer to either run the software on its own hardware or contract with another party unrelated to the vendor. Okay? Now, when you think about that, remember, if you go back for a moment to what I had said earlier, I pointed out that the licensing standard applies, or the guidance applies, to software that is other than software that is not subject to, right? So the criterion that we're just looking at, if software is subject to hosting arrangement and it does not meet both of those criteria, then it would be a subscription. So in that sense, the point is that those types of subscription services or arrangements are not subject to the licensing guidance. It's the other types of software licenses that would be subject to it, okay? And now that'll allow us to go to our next slide. Now, so whether the entity's promise is to provide a right to access the intellectual property or the customer is only getting a right to use the seller's intellectual property is a function of the nature of the intellectual property that the customer gets a right to, right? Now, so let's take a look. So as I said, it's either functional or symbolic. Functional intellectual property, principal characteristic is that it has significant standalone functionality. So for example, it's software that allows you to process a transaction, perform a function, a task, or be played or aired. Now, in essence, therefore, functional intellectual property gets substantial portion of its utility, that is, the customer gets most of the benefit from that standalone functionality. So because it has that standalone functionality, the customer gets to use it when it's transferred to that customer. Symbolic IP, on the other hand, is defined as anything that's not functional IP. In other words, it does not have significant standalone functionality. Because it doesn't have that significant standalone functionality, its utility then would be derived from what the seller has done in the past or will continue to do. And that includes everything it does in its ordinary business activities. Okay. So now let's take a look at our next slide then. Okay. Now, the guidance for sales or usage-based royalties then applies when these royalties relate only to a license of intellectual property, or when a license to intellectual property is the predominant item to which the royalty relates. So now that brings up the issue of what is the meaning of predominant. So you would treat the license as the predominant item in the bundled arrangement when the seller reasonably, when you, the seller, reasonably expect your customer to attach significantly more value to the license than to other goods or services to which that royalty relates. So the main point is here that is the customer going to assume or act as if it is the license that gives it the most benefit. And what it is purchasing, in other words, primarily is the license. Okay? Now, if that's the case, if in essence the customer ascribes more value to the license, then the sales-based or usage-based royalties guidance applies. Okay? However, if you don't think, or if your assessment is that the customer is not going to determine that the software or the intellectual property is the predominant item, then you're in variable consideration, and you have to keep that constraint on the cumulative amount of the variable consideration in mind as well. So therein lies the fundamental distinction, okay? That on one side, if the license is the principal item, then, or the predominant item, I should say, then you have to look at royalties based, the usage based or the sales-based revenue model. If it isn't, then you will be using the variable consideration model. Now, the critical element here to me is, you know, how subjective do you feel this predominant issue is? And to me, it suggests that there will be differences of opinion, and to some extent that's going to matter because it's possible that two companies with fairly similar business models tend to report revenue along using different criteria, right? Because some entities may think they have to think about or to apply the variable consideration guidance, and others will apply the sales-based or usage-based guidance. Once again, note the critical importance of the contract language. And now you can see why I went back, when I talked about the roadmap, I was saying fundamental requirement is to read the contract, understand what it says, and pay attention to the nuances of language, right? So, Vijay, am I right that we have another polling question here?
Tony, we had a couple more slides, but we could jump ahead to the polling.
Oh, no, okay, I'm sorry. We did do this one, so let's see, what else do we have? You mean the setup or implementation and so on? Whichever, I'm fine either way. What would you like to do?
Well, let's actually, since the topic is rather fresh, let's go to the polling question at this point, which was around really some of the topics that you covered right now.
Okay, thanks. So the question here, in essence, is The issue is, when should you use the sales or usage-based concept as compared to the variable consideration revenue model? And I wanted to see what you thought about it, so I give you these three choices. One, maybe you think it's clear, no additional guidance is needed. Second, you don't find it clear and you think that more guidance, implementation guidance, more explanation, et cetera, may be helpful. And third, it is clear, but you think that the predominant concept is going to make this subjective. So that's what I wanted to find out what you thought about it. Okay, so very good. We'll look at that.
And Tony, we're just wrapping up the polling right now, so we have the last few responses coming in. And
okay.
So let's see, we are right about to closing the poll, and we have fairly even split between the last two choices.
Interesting. So in one sense, I guess you can say that, or you could say that the first and the third answer could be put together.
Yes.
Right, and except that, you know, there are a lot of people who feel that that concept of predominant is going to be an issue. Very good. Okay, that was helpful and interesting. So it also tells me that I'm going to have to work harder to explain that aspect of it.
Well, and I know you wanted to cover a couple of more opportunities where you were going to get into this topic in a little bit more detail, and we've had a couple of questions come in as well. So why don't we have you quickly review some of the upcoming seminars, and then I can do a quick wrap-up. Excellent.
Thank you. So I do have these two-day seminars for software and subscription businesses. I've developed these materials for these types of business models. And as you can see, I've got three of them coming up. One's, of course, at the end of this week. And then towards the end of August, I have one in Boston and one in Raleigh. And so I'd like you to visit my website and take a look. And then the next thing is there's a whole slew of other seminars that I also offer, non-GAAP measurement. And then there are so many issues, and so many of my clients have been asking me questions about the costs that either customers or the sellers face in the subscription and software businesses. And how is that going to be affected by 606? So I've developed two new seminars, one-day seminars, and on each of those topics. And then, of course, there's the new lease accounting standard on the horizon, and therefore I'm offering sessions on that as well. So very good. Let's, Vijay, what are the questions? Let's take a look at some of those.
Actually, we'll get to the questions. A couple questions why don't we get to right now. One is actually a very simple question, is where do you find the standard to read?
And actually I'm very glad that came up, because obviously the simple answer is you just go to the FASB website, fasb.org, and the best way to do it is to sign up for a basic subscription, and that's free. So it won't allow you to print it or anything, but you'll certainly have access to it. So that's one way to do it. You can actually get the standard, you can download the standard for now as well. So maybe you can do it without subscribing. I recommend subscribing the basic. First of all, it doesn't cost anything, but gives you access to the entire codification. So that's a helpful thing. That's one thing. Now, when you do that, though, I recommend very, very strongly that you download not only the standard itself, but also download sections B and C, which are the basis for conclusions, because those will help you understand why the FASB did what it did in many, many cases. In addition, you'll have access to what the Transition Resource Group has been talking about, and that's very important as well. Now, by the way, in addition to the accounting standard, the FASB has issued 4 accounting standards updates, so you need to download those as well. So that should, keep you occupied for a few days after you download about 600 or 700 pages.
Great. Tony, we've got a couple more questions, and we'll get to them in wrap-up form. I wanted to offer a couple of additional perspectives from the Intact side as we have spoken, to our customers about ASC 606 as they've gotten, their handle around what the new guidance means and how their business works. Wanted to share a few perspectives that we've come across. And as a company, we've been focused on finance, and so Intact has been tracking the progress of ASC 606 for several years now, really with a view towards understanding how we can help our customers have as smooth a transition as possible. And one of the areas that we focused on is automation, automating as much of the accounting as possible to ensure accuracy, to help enforce strong controls. And I want to spend a few minutes on what we've done at Intact for our customers in the area of automation. One of the steps you said, Tony, was review contracts, right, that you have. And as our customers, in parallel, they've been doing two things. They're familiarizing themselves with the new guidance. They're reviewing their business practices. And there's a few issues that consistently bubble up. As we've had conversations with controllers, finance executives, revenue analysts, a number of issues, come up on a consistent basis as being significant differences. One of the differences that people react to is, it's not going to be in every case that you can recognize revenue on cash receipt. Another concern or change that comes up that people see as they, again, assess their business, look at the new guidance is, the focus on the contract means that in many cases, add-ons, upgrades, and renewals of subscriptions are going to be treated as, changes to the original contract as opposed to creating a separate one. So in many cases, recognized and deferred revenues, will need to be reallocated, more frequently every time a contract changes. We didn't get into it too much, but there's issues around, expenses, and there's going to be cases where companies may need to more frequently, defer expenses related to the contract, again, based on their business practices. So, the way that items like sales commissions or royalties need to be treated may change, and there's also the aspect of dual reporting, especially, for companies that choose the full retrospective method. It's going to be essential to report according to both sets of guidance. And as we've kind of reviewed, these, ASC 606 and the guideline changes, as we've talked to customers about, their business practices, many of these changes, coping with the differences, from an accounting perspective, by relying on spreadsheets is not going to be a tenable solution. And part of that has to do with the fact that for subscription businesses, many of them are struggling with systems that can't handle, the day-to-day billing, the day-to-day accounting, and the day-to-day forecasting. So there's already a great deal of reliance on spreadsheets. And now, with the introduction of these changes and, with the possibility of dual reporting, with just the fact that, the guidance changes may mean that your revenues, expenses, your income statements, your balance sheets are going to look fundamentally different. And many subscription companies find themselves in an environment of rapid growth, using spreadsheets to kind of conduct the day-to-day that's even happening today, and then layering on, another set of spreadsheets is just not something that companies are looking forward to, either from a productivity perspective or an accuracy or controls perspective. And so what we've done at Intact is really deliver an automated solution that we call contract and revenue management. And it's been built to put the contract at the center and to help automate some of these changes that are going to be impacting subscription companies specifically. And what we've set out to do is to deliver a solution that can automate all of that. Some of the key capabilities that we've included is the ability at a contract level to apply both the current guidance and ASC 606, that's 605 and 606, at the contract level to give companies visibility into how these changes are going to impact them from an accounting perspective, and do it as a dual treatment at the contract level, and ultimately roll it up to the reporting level as well, which, as you noted, opting to do, the full retrospective is going to provide a great deal of visibility, and we're giving the companies the ability to prepare right now, because for many companies, subscription companies, contracts that are being written today, multi-year contracts, are going to span the transition dates, right? And so the ability to get their arms around the impact of the changes, to do the dual reporting, both that's going to be necessary if you choose that full retrospective method, but also in order to be able to prepare the business for those changes. So some high-value automation capabilities that we've been able to deliver for companies that, subscription companies that are dealing with a great deal of complexity, right, around the accounting with ASC 606, but also around billing, forecasting, and reporting. And so with Intact, we've taken the customer contract, put it at the center of this architecture to enable, subscription companies and finance organizations to manage the complete contract lifecycle from a billing perspective, even if you have fairly complex billing and pricing models, down to being able to handle that contract lifecycle on a global basis, being able to integrate the finance function and the billing and the accounting and the forecasting function very tightly with Salesforce, because for many companies, contracts may start in Salesforce and then provide the ability from an automation perspective to do the dual treatment and to do the dual reporting to really master that accounting transition. So for those companies out there that are interested in learning more about Intact, I'd like to offer up a few additional resources to learn about Intact and how Intact can help you from a systems and a technology perspective make that transition a little smoother. And so with that, let's get to a few questions right now. Tony, are there any particular ones that struck you as questions that you want to prioritize here?
Why don't you start with one and then we can see if there's.
Sure. So I think one of the first questions, and you may have covered this, but it might bear repeating. The question was around when you were talking about the notion of predominance, and the question was, if the vendor must host the software being used by the customer, that is, it's not distinct, does this preclude consideration from license guidance, even if the software is considered primary or dominant?
It will depend on the language, but so there are conditions where I can see it being excluded, and in other words, being considered variable rather than the royalty type. But it really is a function of the language.
Okay, great. Another question that's come up here has to do with going public or filing and to go public. And if the company is expecting to go public or file with the SEC in 2018, does the company have to present 3 years of revenue under the new standard or only 2 or 3 years under the old standard? So maybe if you could, in general, Tony, talk about the dual reporting and the periods over which it needs to happen. I think the audience would find that helpful.
Yeah, in that one, I think you're going to be, you'll have to provide under the new because you're going public in 18. So you'll be doing that, and fundamentally, with my clients that are private companies that are thinking about it, I am recommending very strongly that they start thinking about the new guidance. And in fact, in 2 cases, I'm working with companies to already analyze their contracts to start thinking about how they're going to have to change.
Great, great. Okay. Well, we have reached the top of the hour, and we've had a few questions that we haven't been able to address live, but I wanted to assure folks that we will be following up with you individually to get some of those questions answered. And a reminder that as you exit this webinar, you will be presented with that survey. Please complete that survey. That will facilitate the processing of your CPE credit. And with that, what I would like to do on behalf of both Tony Sandhi and Intact, I wanted to thank all of you for taking time out of your busy days. We hope you found the webinar informative and useful, and we look forward to seeing you at another webinar or training event shortly. Thank you very much.
Thank you, Vijay. And thank you to the audience as well. Appreciate it.